The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, and thank you for those who attended my webinar last night. I think it was one of the most comprehensive that I've given in terms of overview of where we are and what we're looking at in many, many ways. So it's still available, and you will get 1 month of my service free. So consider signing up for that. It's archived. It'll be on your webpage for 30 days. Hey, this is a fascinating market. Let's go through a couple of things here. But before we do anything else, let me say thank you to our hosts earlier on. Fabulous shows. Hopefully we can keep that standard up here. And, I see that my T-shirt that I'm wearing has the blimp. I always forget about that. My son had them as a client once, gave me the shirt. It's actually a vodka company. I don't drink vodka, so it's very interesting. I'm just looking at it here. Very nice. Nice blimp, anyway. So let's go on with the story. Thank you to our hosts. Really great shows. I hope I can keep up that stand. Of course, we've got it going Thursday. We go right through until 6 o'clock this evening. And stay tuned to TFNN. Let's go to the Dow. The Dow's up 30 points at 17,989. Maybe let me do this because we're going closer and closer to the election completion, hopefully the completion. So let me do this. The E-mini is up 2. You see this 200-period exponential moving average. You see the large arch formation. We broke the previous low. We went to a low this morning of 2,084 round number. Trying to bounce here. It's really important. This is the third session that's underneath the left side low of 2100.25 made in September the 12th. It's running out of time. It's got to close above 2100.25. It's another 6 points higher. To be able to have a really strong bounce. The technicals are they're attempting to rally here, at least to strengthen. It's a very important session for a number of reasons. Why? Because the weekly chart of the E-mini is in a sharp leg beat to the downside with very poor technicals. The 120-minute chart you can see right here is attempting to rally, but it's that monthly chart that I spent time on last night discussing monthly charts and what the perspective is. So let's go on. We're going to now go to the Dow, INDU. I'll give you the parameters. People always say, can you just show the 10-minute chart? Yeah, the 10-minute chart has made a peak G/C1C2 double top right there at 7:20 in the morning. It started today, 11:03. That's 4. That was yesterday, and it's continuing 11:03. Isn't today today's the 3rd. Did I put the 4th somewhere? Anyway, it's the 3rd. And so we got a double top here. This is that U-shaped pattern. We pulled back. We went 1-to-1 to the downside. It really makes it simple. A close, 2 10-minute bar closes underneath 2091.50. Says we go much further down. I think there's enough residual strength to say, based on the VIX index, and we'll go to that right away, VIX.X, way up in the 20s the past few days. We went to 2043 on the 1st. Today it's at 1947. We've got a peak D with a rectangle formation. I still think there's insurance buying going on, and that's really important. How the market resolves, as I spoke last night, how it resolves when the VIX index actually comes down is going to be a very big issue. Does the market have a huge spike to the upside, or is there just so many dark clouds right now that it's going to have a tough time to do it? Is this more than insurance? Is this telling us something? Up 17 cents at 19.49 in the high 19s, in the 19s to the low 20s. You would expect a triple-digit decline. So something's keeping this market up. Made a U-shaped pattern. There's a lot going on. Let me just give you the parameters. At any point today, if the VIX starts to break under 19, you'll see some buying support coming into the market. If it holds in the 1950 to the 1940s or even makes a new recovery high, this market gives it all back and we close down 40 or 50 points in the Dow. All right, let's go on. So the Dow, I'll give you the parameters. The Dow right now is up 32 at 17,992. And see this dash trend line that I show my subscribers every day? I discuss this. As the Chapman wave went through an Elliott wave 5 in the 120-minute chart, trying to bounce. If you can't get out of this in the next 220-minute time blocks, it's going to be very poor. There's the election in the daily. See this empty zone? My concern is if we break this key support right here, the green line, we will go straight through that red line. And if the Dow goes into the 17,870s and holds there for even an hour and a half, we could go quite a bit lower and go right into this empty zone. And it's very empty to 17,063. How will that unfold with the VIX index is going to be really interesting. Well, we'll deal with that as things happen. At this particular point, let's go on to the right here. Let's go on to the S&P. So Dow parameters today, it needs 17,820 just to show some kind of strength, because 18,034 is the 120-minute 9-period moving average resistance. And then you go to the Dow daily, which is 18,083. It's going to be real tough to do in this environment. Now, weekly chart says that the Dow's already gone to a leg C, and the MACD and stochastic are still very weak. That monthly chart is going to be absolutely critical today a week. By Thursday of next week, that monthly chart is going to be very, very important, even more important than now. SPX.X, that is the S&P 500 index. Under the 200-period moving average at 2,100.49, up 2.53. It needs to break above 2106 to get over that 200-period exponential moving average resistance. It's going to be tough to do. This is an uglier chart than the Dow. This has almost got a 1-to-1 to the downside in the weekly chart. The monthly chart is now underneath the 9-period exponential moving average. Man, I tell you, this is going to be a very interesting week coming up. So parameters to watch: 2092, major support, upside resistance is between 2106 and 2111. That's the resistance area. The QQQ, let me tell you something. That information I gave yesterday on the QQQ, the analysis I did last night, and what I gave to my subscribers, I'm suspecting that the Qs are really telling us what's going on in this market. And it says there is heavy selling going on. You've got the QQQs made a peak E right. For my subscribers, I'm going to give you over the weekend, I'm going to talk about the Rogue Wave, the right arm extension, what this peak E sudden gap up spike in the daily chart to 119.66 on the 25th of October means in my work, and how it relates to this very quick peak. A, B, C, D, E, F. This is a textbook example of something that I don't think I've seen more than once or twice in hundreds and hundreds of thousands of charts I've looked at in the weekly charts. It just suggests that when you go that quickly to a D, E, or F as a top in the weekly chart, you better be careful, because there could be quite a pullback to the next lowest low, and that would be at 113.63. That's 1.3 down from where we are right now at minus 22. Let me take this moment just to say I'd spoken, when I mentioned to Tom yesterday as we were wrapping up the interview late yesterday afternoon, that I thought that Facebook weekly chart was finally giving me the same action that we got in Amazon and the Qs, that it looked quite poor. Amazon's down 5 at 121.45, made 133.50 peak E top. Oh, I haven't even got through all the numbers. I'll be right back. Basil Chapman, Dow's up 36.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We'll be with our first caller right now. We'll go to Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you?
Okay. Have you got 1 minute? Can I just finish the numbers and then we go right to you? Good. Folks, the gold is trading right now down 7. It was down 17 or 18 earlier on. It's now only down 7. Peak E being made if it doesn't take out yesterday's high. This is impressive action with gold. And I'll tell you why. Because the dollar is trading right now down 12 cents. It should be quite a bit higher. Dollar should be testing the 9 EMA at 97.90. So the weekly chart tomorrow at 4 o'clock is going to be really important for the dollar. It's going to be really important for gold. And I'm impressed at the way the gold stocks have pulled back, and then suddenly today they've bounced again. So this is important to keep in mind. The TLT, let me just do that quickly. It's just stuck here at 131. It's down 58 cents, kind of stuck at the lower end. Watching the candle in the weekly chart in leg D. And I'm only finishing up with one thing more, and that'll be crude oil down. If you look at the crude oil peak D in the daily and the weekly, you'll see that there's another arch formation being formed right there. And that's also speaking to the market, because if crude oil keeps pulling back, it puts a cap on the upside. Ben, I'm with you. What's the question?
Yeah, so two questions if you got time. So one is for longer-term 401k, IRA kind of thing. It sounds like you're in the coda phase now, and if that's correct, looking at a 3 or 5 year monthly chart of the Dow, it looks like it's hovering right on the 9 EMA. Is that correct?
Correct.
So if one was to start adding small amounts to the 6-month, 12-month horizon, would that be? And I'm willing to sacrifice 200-300 points. Would now be a good time to start adding? And as it comes down, maybe 200-400 points, you can add some more, knowing that we're looking at maybe another 2,000 points up. So
let's do this. Remember 18,669 starts leg D, and that's only 600 or 700 points at this point. And then I suspect we'll still go to an E, because the S&P will only have made a C, and it needs to make a D. So just in the context of what we're talking about, just let me just quickly tell listeners that if I can find the chart right here, The Chapman wave is a concept that tries to identify the lowest low bar, and from that moment on, you count each successively higher peak alphabetically, uppercase A, B, C, D on the upside, lowercase on the downside. You can go to a D. That's your critical point. Other things can happen at that stage, but mostly that's where you want to put the yellow light flashes, and you have to reassess to see, is it restarting? Is it an instant restart? Is it making a top of significance? That's your objective, is to get to a D. So here we are. Let's go back again to our Dow chart. We're at a peak C, therefore we should get to a D. We've seen how many Ds there have been with serious pullbacks, and we haven't had a major pullback in the Dow since the May high of 2015, the whole consolidation. Then we squeak to another high. I'm going to make this kind of recommendation, because if we break upside to 18,000, I said last night in my webinar, I said above 18,400, other things are happening, and there's a really good chance that the Dow is going to, at that point, start to move towards a new all-time high. So I'm going to tell you to, for about a year now, I've said, put some money aside. And in fact, if you look at the market for a year, we've gone nowhere, right? Although technically intra-year, we've been down to 15,370, and we've been up to 18,670. So, but if you're looking at where we are right now, you haven't lost anything by not putting money to work. And I'm suggesting to you, don't be in a rush. And the only reason why I say that, I have to take seriously when so many of the key NASDAQ stocks, like an Amazon, where is it today? It's up 8. It's trying to find some kind of a base, but it's made a peak in a D in the weekly chart. Very important that Amazon starts to form some kind of a base here. But if you're going through your Facebook, as I said just now, Facebook peak G, this is a serious pullback. And the QQQ, I can just go through umpteen stocks. If I'm correct, that a weekly chart has a greater importance than a daily chart when I'm looking at the tide. And there was also a one-to-one expansion exactly. Well, it's a little higher than it should have been from the February low of this year in the QQQs. I'm relating that and saying, if there's a rotational correction, the Dow might hold better than the NASDAQ, which now is kind of overbought. So why did we do this? I'm going to say to you, and I realize that this is 401. This is money that one works very hard for. You really don't want to mess around with it. You want to try to be as accurate as you can within the framework of saying, I'm prepared to give it X amount of percent leeway. I'm prepared to be wrong for X amount of percent. I'm going to say, hold on. Even if the Tuesday night turns out to be a result that the market thinks is just fantastic, even if there's a 300-point gap to the upside, you will still have time to get in with that money that I said keep aside for that rainy day. And I think that the rainy day is going to come closer to the 17,700, 17,500 area than here. So I'm going to say, yeah, the thinking is correct. Even if you were to proportion it out in two packages, I'd rather it packaged out at 17,000, between 17,700, 17,500, than to do it here when we're only just beginning the rollover, potential rollover in the QQQs, the NASDAQ, the Index 100 trading vehicle. And
no, that's good. That's good feedback. So I guess what you're saying then is from a pure Dow standpoint, that you see some consolidation under the 9 EMA for a bit.
I think so, and it doesn't have to be. I would not be surprised if price-wise we've gone about 2/3 of the way, or maybe even half the way in the correction, if it's going to be a serious correction. If there is any big surprise on the upside next week, a big gap to the upside, 300 points, I don't think it's going to hold. And if it doesn't hold, we'll be back talking at the same level. And then what I will say to you is, now I think we've raised the base a little bit, but we haven't changed the outlook. The only thing that would make it different to me is if we start, and really what I've said is we start to trade in the 18,400s for 2 out of 3 consecutive days at any point in November. I have to consider that we'll be on our way to the upside. And big deal. So you lose at 200 points, but if you're in the right trend for the upside, because the monthly is still in a buy mode, if you're in the right trend, you should be saved by the tide rising. But I don't want to be early because I'm a good surfer, but a lousy swimmer. I don't want to be caught too long in the tide. Not
Good.
without a board.
Well, no, I really appreciate that feedback. That's great. And then I bought a little bit of the GDX this morning, and do you see that? Looks like it should make the peak, the leg D yet, correct?
It should make the D. I did not like the action yesterday. We had it as a long, and we got stopped out. It ran from 25 where we entered and went to almost 26. But I did not like that gap down yesterday. And I also looked at gold, and it said to me that gold should be pulling back a little bit more. So I'm going to say, yeah, I think you were right. I should have got right back in lower than we got out.
Well, what I liked about it, Basil, is how it filled that gap.
So then let's talk about it. We'll talk about it in a moment.
Yeah.
Can you hold on? We'll talk about
Sure.
the GDX as the gold mine. As Basil Chapman does up 32. Be right back. Biff?
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so we're looking at GDX with Ben in Tallahassee. It's trading at 25.27, up 51 cents. So the pattern that I'm looking at still suggests that gold is going to have some kind of a retest. But the gold mining stocks, especially some of the smaller ones, are acting very well. I'm going to suggest that your re-entry for a potential leg D, because it has already filled that gap that was down from on the 3rd, it closed at 20. The low was 25.65, and on the 4th, the low was 20. The high was 25.10. So it's full that and went to a peak C, and then maybe as a really good comment in the den was could the sell-off in gold miners yesterday just have been news driven by Fed minutes? Now we have corrected and that we are back into the trend before the minutes. I think that's a really good point, but I am going to draw in the arch formation. I'm just going to make the suggestion that you've entered really well if you got in at the opening this morning. Let's see how it handles 2640 if it can get there. If it does go to 2640 or higher, that weekly chart will start to improve a lot. So you're in nicely. I'm going to make also a suggestion that in your case, because you like to look out a little bit further, you might want to make whatever your stop was when you entered. In this particular case, have a little patience. Keep that stop if it's, say, below. That's like called the 9-period moving average of 2460. If you want, you can treat 2460 as your stop. So it's like a 1.5% risk that you're taking right now. But the nice thing is, if it goes to D, then you can put it a stop at your entry point, and then say, okay, I'm in this position. If it keeps holding, where it'll bump at 2584, it's going to bump into the 200-period moving average resistance in the weekly. Folks, we're looking at the GDX. This is the Van Eck Vectors Gold Miners ETF, acting very well here. And the MACD and stochastic are still, well, the MACD is good, stochastic's okay. But I think that it's got a pattern that says to me, if there isn't a spectacular break to the upside, it could come and do some retesting. Somehow or other, with all the stuff that I've read and all that, I might be going against the grain here. But I think we will try for the monthly chart to go to a leg D in the dollar. It's only got 3 points to go. That shouldn't be a big deal. So that's what I'm thinking. But I think you're in at a good point. My recommendation is give it the stop that you had when you got in. See if it goes to D, and at that point you can make some adjustments. I hope that helps you.
Thanks a lot, Basil.
Thank you very much for calling. Always appreciate it, Dan.
Thanks.
You too. So, folks, let's do this. There are a couple I had to type it into the den so I'd actually remember this. So Chicago did fantastically. So this is the story. I mentioned this on the show about 18, I can't even remember what it was. I could go back and try to find it, but I heard Jonathan Kraft, this is Kraft's son from the Patriots, who works for the Patriots, and I heard him give a talk. It was a kind of a private talk, let's say. And I was there listening very closely. He was talking about the selection process that went on in the Patriots within the context of what he's talking about. And he said, and this is what Theo Epstein does as well. And Theo Epstein at the time was with the Red Sox. And I was absolutely riveted to my seat. Why? Because he was talking about while all the older guys, the coaches and managers, were looking and looking and looking at the players, they were in the back room with computer models, and they were looking at the statistics. They were able to find players, and at the time they said, why should we pay for X person when we can get 2 or maybe even 3 who have the potential for the Patriots to become fabulous players? And we scan this, and I'm saying to myself, this is technical analysis. This is like doing the MRI of the patient. And I think that was proven last night, because I don't, if I see the game, I see the game. If I don't, I don't. I like playing sports. I'm not that avid a fan of watching. I always like it when I see it. So I'm not for 1 second even going to talk about the game. I'm just saying that it was fascinating that they won, that they came, from not even has-beens, but no-beens, to come right into the finals like that and then to win. And I'm thinking back to what Epstein said, and I'm saying that was pure. If he kept following what was discussed 8-9 years ago, that was pure analysis, technical analysis. Now, you might also remember there was a period, I can't even remember where it was, where I said, I've done my technical analysis. I don't watch anything, but from looking at the Boston Globe, I have a sell signal on the Red Sox, and I know they just won, but I've got a sell signal because whatever is going on is not good. And you remember that next year they did not do all that well. So technical analysis is really quite important, and I think he's really, if he's been following through, and it seems like he has, bravo to technical analysis. That's all I can say. It doesn't matter what the field is. Aha! Then I got an email. Let's see. Stephen had a question here. Beat? Oh, hi Basil, love the show. Could you do beat, please? Thanks. Beat. Now let me see if beat did beat. Beat, B-E-A-T. What is beat? Beat is a biotelemetry Inc. Okay, so the month, this is, whoa, down at $1.33, down at 17.02, just got smacked, minus 7%. So this is a very interesting chart. Just talking chart patterns, I actually looking at it, and I'm saying to myself, I'm sure there's no volume. 383,411, 195,000. This is where you book an appointment to buy the stock. It's hard to get out. It's easy to get in. I'm going to just do this real quickly. Let me do the Chapman wave analysis. We're looking at BEAT, looking at the low in June. Going to count the peaks. There goes. Peak A, peak B, peak C, peak D, peak E, peak F, and that's a G. So an unusual G right there. 2142, 2137. And I might even say that could have been an instant 1, 2, 3. And yeah, it even has the characteristic of an instant restart. I always have to put that in, and therefore I have no choice but to call this a G, possibly a G/C, and leave it at that. And now let's continue, so C. And then it plummets, goes all the way from the 21 area down to the 17s. Spikes, oh, look at that. It gaps up on a news-related event. Now there's your D. That's the leftover from the instant restart. That I'm sure I would have missed this. I would have said it's probably a C, but I'm going to call it a D/C. See what happens. And lo and behold, it comes tumbling down. It tries to hold, and then today gets a real slap in the face. I don't know what it is. Maybe I'll find out what it is by doing this. Give me 1 second. Right there. News. Find the news. Okay. And it says, Biotelemetry reports Q3 EPS of 0.15 versus an estimate of 0.11. Okay, so maybe that disappointed. Pursuant to section, and what was this? United States Exchange Commission, current report. Biotelemetry, exactly, a registrant. Is this something, a registrant under Africa? Results of operations, and, this is just the results. Okay, I'll be right back and we'll finish up with BEAT.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, Steve, this is the story. Beach down $1.25, down 6.8% at 17.10. I always think that people will send in a request because this is something they followed or whatever, for whatever reason they've got that on their radar. If you've got it on the radar as a buy, I'm going to say please don't consider it as a buy, not yet anyway. Something's wrong. It's got a D in the daily. That's an alternate count. I've got an F in the weekly and an E, possibly a peak E in the monthly. I think this is coming down, and I would just say to you, let's see if it tests the 16 to 15 area and holds there for about a week. Let's look at it again. But at this particular time, I'm going to say to you, be real careful if you are in it and it pulled back more than you expected. I'd be very strict. Take off half of your position, right? I would get out of the whole thing. But take off half of your position here. And if it has any kind of a bounce back to the 1790s, that's another 80 cents higher. Start lightening up, or at that point you can put a stop on the remaining section. I don't think it's going to be going much higher. I think it's going to be going lower over a period of 2-3 weeks. So please be careful. This does not look good to me at all. Now, just real quickly, someone asked me about my 10-minute. Yeah, the 10-minute is just making that arch formation. I think it's going to test and probably break 2091.50 if this kind of weakness keeps up. Now, the next thing, I had a question here. First one was SMHs. The SMHs right now up 5 cents at 67.27. We are short the SMHs. We're actually short the SMHs. We haven't got the other position yet. We're trying to get that position. We hope to get a different to add to that position. So the reason is peak F possibly in the weekly chart, holding after that ugly candle that was the F candle. Here you got the MACD turning down, the stochastics under 80%. This is looking to me like on the it's just the monthly that's holding very well. And I'm just doing it one step at a time, and I'm saying, yeah, I think this is going to come down. And if SMH is at 67.25 trades for more than 1/2 of 1 day in the 66.70 area, that's 50 cents lower, there's a real good chance it's going to test the low that was made, and that low was made on the 13th of October at 66.06. Hope that helps you for the SMHs. Oh, where would I be wrong? I'd be wrong. I'd have to be wrong by breaking the peak D, which is 69.23 on the 27th, after that peak E at 70.21. So that would be 69. Going to 69.50, I'm saying to myself, wow, that's superb strength. It can continue sideways, but it's not breaking down just yet. If you look at Intel, Intel's telling a different story. It's saying, uh-oh, I got a problem. I'm down 39 cents. Peak F in the weekly chart. I'm calling this still C in the monthly, but that's going to be a question whether it's an F or not. But it's not acting well. Intel is really a big portion of the SMHs. So now I'm going to, the question is, Basil, can you please comment on gasoline and oil? So let's go to this. See, I'll wear my usual questions here. email questions. It'll be coming, I'm sure. We'll get one. Yeah, crude oil. Okay, good. Crude oil, I think is going. You remember yesterday I said peak D in the daily chart, right there on the crude oil continuous contract 52.22 on the 19th of October. Look at this. This is that 9-period moving average. It hasn't even once closed above it. It's tried to go. It's touched it, but it keeps failing, and now it's way below 47.44. 3 points almost below the 9-period moving average. No, I think this is a problem. I think it's a serious problem. It's going to test this trend line that I drew in the other day, and it's right there now. So if crude oil tomorrow at the close on a weekly basis, if it does close below 44.20, that's not a good sign at all. And the monthly chart has that arch formation. And you said is it heating oil? HO, I believe. HO, heating oil? Yep, there we go. Heating oil is acting exactly the same way. And I think, we've had I'm going to go out when I'm done. I've been working so hard. I'm just going to go out and hit some balls against the backboard outside instead of playing indoors when I'm done here, because this has not been a fall at all. It's been fantastic. So maybe we're looking at least for now, this first part of the winter, not as bad as we thought, because heating oil is pulling back. This is that arch formation. You remember I drew it in. I said if it fails to close decisively above the left side V-shape pattern from the 10th of June in heating oil, that would be above the high of 1.6614 in the continuous contract. That's not good, because then it creates the arch formation. So I'm just saying heating oil has to hold 1.39. It's at 1.46 right now. If it breaks at 139, it's coming all the way back. I think that it's getting close to retesting this area here in leg D. I got 1.41 as the 200-period exponential moving average. I don't know if it's going to go there just yet. I think it's just about just try to form a base. Let's just quickly look at the dollar again. What is it doing? It's not bad, down 10 cents. And as gold rallied much, right? It's down 8. Yeah, I'm going to stay with what I was thinking. I think gold is acting very, very well. I think gold stocks acting a little bit better. I'm still thinking there's going to be one spike for some reason in the dollar. It moves higher. I don't know if it will make that recovery high at 100.52. At this point, I think there's a chance that it does it, but I'm going to be watching the relationship. My thinking was that within the next 6 to 8 weeks that gold actually does, the dollar actually does that. And then gold can have a really nice, strong, sustained rally instead of just what I'm thinking of now, more as a bounce. Your reservation has been canceled. I love that. We've successfully canceled your reservation. Your credit card has been charged with a $250 cancellation fee. I have no idea who these people are. Well, they're trying every trick in the book. It's just amazing, huh? Well, I'd rather have a question about oil than that. Well, let's go on. So this is what I'm really looking at here. In terms of different, look at the PPHs. This is the Van Eck. The Van Eck has all the ETFs right now that are attractive to me, the ones to study, that is. So the Van Eck pharmaceutical ETF, look at that, down in leg C. It couldn't make the arch formation, the cup formation. The arch formation was successful. It's pulling back very sharply. I would not be surprised at 52.12 down 23 cents. It actually does head towards the 46, 45 area where the 200-period moving average is. And remember what I said, at any point in any week, if there are 2-3 days that goes underneath the wick of this Chapman Wave Roman candle, and I said round about the 54-ish area, watch out, we could test the lows, and that's exactly what I think is, at this point, it appears could happen. It's close to some kind of a bounce attempt, but I'm a little concerned that the pharmaceuticals are moving down so sharply. The other thing that I want to look at here was, I had a question about the IYR. Yeah, Rosie from Russia. I don't know who they are, but they try to get clever and clever. Here's that very quick ABCDE in the daily chart of the IYR, trading at 73.89, down 10 cents. This is the iShares. Dow Jones US REITs index it's been changed a little bit now. So it's got, SPG, Simon Property Group. Let's have a look at that. And it has, I don't know if it's still got AMT. It's the XLF. They took all of that out. Yeah. So SPG, AMT, CCI, PSA. Oh, man, it's just got all the heavies in here. Let's just look at SPG because that's going to be a clue. SPG, I meant to look at it last night, then forgot. Is this getting clobbered? Simon Properties made a peak D in the monthly chart, peak E in the weekly, and it is down from the 229 area to $180, $100. Man, this market is ruthless. It is so dangerous. I'll be back straight off this. Dow's up 29, S&P's up $1.46. Lousy action. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Listen to those shows. Great shows coming up. Anyway, let's look at telephone. This is typical of what's going on. We had a real nice trade from December. We were long. We went all the way. It went from the 34 area we got in. It hit 43.89. I said, maybe at this point, if you're a swing trade, you can get out. But we're waiting for dividends and all that. Dividends don't make up for a decline. 43.89. We got out at about 40. 39.99, something like that, having taken all the dividends, and they were out, and now it's down at the it's hit 30, the 36s is 36.93. Is this the time to be looking at a telephone again as a dividend stock? These are things that I want to be doing over the next few days for subscribers. How to reposition ourselves and start and to continue positioning to be able to get the benefit of what could be successful long, because there's some protection, in this case a dividend, if it's worth 45 cents or 52 cents or whatever. But other than that, it has to be something that has capital gain as well, not just a dividend That's not good enough for me. I don't want to lose capital. So that's that. Now, the other thing is, so we have some stocks. We have, for instance, we're still in the short position of the EW going from 121 down to the 88s. Now it's at 90.76. This is Edwards Life Sciences. This is what made me very nervous. Major stocks, fantastic stocks, getting clobbered based on the weekly charts. It really makes me nervous. We got another one we got in the other day. This is in a completely different area. It's pulling back sharply right now. We got it just close to the all-time high. We'll see. That's the only way you can do it. You've got to pick your spots and pick your battles, and then put in your buy stops or stops, whatever it is, and just let the market tell you. I'm suggesting having a little bit more in cash right now is really important to be able to survive this market under any condition. So that's what we're looking there. I want you to, what was it? I had a question about, last night we looked at junk, JNK. And JNK went to the 200 period moving average, and this is the Spider BB Barclays high yield bond fund, but it too has made an F. I'm almost certain it's going to be a peak F. I've got it as an F with a down arrow already. Maybe it's premature, but it didn't even get close in the weekly chart to the 9-period exponential moving average. Well, it got kind of close, but it never got close enough to touch it. Last time it hit it was back in October of 2014. So this is really important. And if I had to draw a large arch formation, even if it's just a temporary stalling, this is a rectangle pattern, says it could come down a little bit more. So we're going to be watching this. We're going to be watching the TYX weekly chart. It's holding quite nicely. It's up 39 cents now at 26.02. Let me see the weekly chart. Yep, this is the weekly chart. I've got a leg D. It hasn't made a peak D. We have to wait for Friday at 4 and at 26.38. The high today is already 26.31. Eight ticks to go, and then it makes a new high, extends leg D. Interest rates are going to be very important. I don't think the Fed can do anything under these conditions. Let's see what happens. So we're about to sign off. There are a couple of things. In my webinar, I went through so many areas in great detail. I talked about the market in great detail. How we're trying to position ourselves. On Monday or Tuesday, we might have to do a little bit of negotiating to say, well, let's prepare for this, let's prepare for that. I'm inclined to think that any spike, either way, downside or upside on Wednesday, it's probably best just to let it play out unless you're already in the position and you're correct. But if you're wrong, you're going to be kind of stopped out and either break even or at a bit of a loss. So I want the tide to change, and I don't think one spike to the upside is going to change the downtrend. But if it holds all the way through into Friday, then we've got to consider something else. So I'm trying to be as flexible as I can. I'm trying to be as specific as I can. The issues that we have, I want to follow them, and they're working. When it doesn't work, and when I get stopped out, now you have to get back in. You have to rethink things, but that's the name of the game. So don't be afraid of this market. There's nothing much has changed. Just deal with it as it comes. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.